Hi, everybody, and welcome to UFile's Facebook Live event. I'm going to be your co-host this morning, today. My name is Ida. So it's very simple. Underneath the video, in the comments, please write us your questions. Be as specific as possible. Give us the details that we need in order to help you answer the best way possible. And to answer those questions for you today is our very own tax expert, Jerry Vitaratis. Hi, Jerry. How are you?
I'm good, Ida. How's it going?
Good, good.
Another tax
Tax
season's
season, yep,
here, and it's like every kickoff of tax season is always a Facebook Live, right? It's always it's always that kind of event, and we're
exactly.
here to answer questions. We do it for free, by the way. We don't ask for anything. We just ask you to just like our page, promote our product. Hey, UFile's the best, UFile's the greatest. Just go ahead and just promote our product to everybody, and we answer your tax questions for free. I mean, what more can you ask for?
Exactly. So we know tax season officially for 2025 took off February 23rd. Government is
Yeah,
already is open to receive your electronic files. So
yeah.
it started. However, there are a few changes this year that we need to, you know, keep track of. And one of the new changes is a rename or revamp of the GST.
Yeah, is
You want to
the
talk
what do they
about
call
it
it
a
again? The
little bit?
grocery rebate and some really long name, but basically you're talking about the grocery rebate. Let me look up the exact term what the government renamed the GST credit for. It is the Canada Groceries and Essentials Benefit. There you go. My God, that marketing team is really something. Well, thank you, Mark. Thank you for the kind words. Here we go. Let's show that over here. You guys, thank you so much, Mark. We really appreciate it. I hope you appreciate that we do this for all of you, where we simply, just go ahead and answer questions. We don't ask for anything. Just a little like and subscribe to our channel, and that's about it. Um, but essentially, yeah, it's with the replacement of the GST credit. So they're going to call it what's it again? Grocery Canada Groceries and Essentials Benefit Rebate. My God, that's a mouthful. Anyways, so essentially, what it is that it's going to be the same conditions as the GST credit. So it's going to be a quarterly payment based on the income that you gain during the year. Okay, you have to file your tax return to be able to get it. And the one change they did make to it is the fact that the June payment, or what it was scheduled for the June payment, is going to be increased by 50%. And then as for the next 5 years, they're increasing the regular payments by 25%. So that's essentially the change that they made there. And like I said, they just renamed the GST credit, the grocery and essentials rebate, whatever it's called there. I don't think I'll ever remember that name, but anyways, and I mean, it's a great idea in general. It's going to help people because that was the purpose of GST credit, right? If people look back at the history of the GST credit, it was when the GST was imposed in 1990 or 91. I can't remember which year it was. The new government that come in afterwards, was the Liberal government, they had promised to eliminate the GST credit, but then when they realized, really need the funds for that GS from the GST, they decided to give a rebate to lower income Canadians, to alleviate some of that tax, right? So that's essentially what it was. And now the government's calling it the grocery and essentials rebate. It's the same concept. It's exactly the same credit. They just renamed it. That's all. So I think we've got our first question. Let's have a
Yes, we
look
do.
here.
From Devon. So, medical
Okay.
expenses. My work benefits plan covers 80% of my expenses. Uh, A, am I able to claim the 20% under the medical expenses portion of the return, line
Mm,
33099? That's his first question. B,
yeah.
if I am, if I am, how do I calculate it? Where does it go in UFile, and does it generally make an appreciable
Appreciable
difference
difference
to my
to my
return
return.
amount? I entered the info based on what I know, and it didn't seem to move my balance at all. So go
Okay,
ahead.
so Devin, the answer to A is yes. You're allowed the 20% that you're paying out of pocket. So whatever is not reimbursed by your medical insurance is essentially eligible for the medical expense. Two, where you enter it in the medical expense section. Okay, you simply go into medical expenses, you go in there and you plug in that 20% amount that you did not your insurance did not reimburse you. Okay, now did it make an appreciable difference? That all depends on your tax return. I can't tell offhand whether it would or wouldn't, but essentially the way medical expenses works is that you take your total of the medical expenses you incurred during the year and then you reduce it by 3% of your net income. And then the difference afterwards is your medical expense that you can claim for the tax credit. And remember, you're claiming 14.5% of that excess amount. So it could be that your 3% of net income is above those medical expenses that you're claiming. And that's why you didn't notice a difference. So the key is just make sure that you're claiming all of your medical expenses. Maybe you've forgotten a few. And that's a lot of, when I do these interviews, I get people ask, oh, where are the mistakes that we make on the return? It's that. It's a lot of times you miss out on claims that you want to make, that you can make because you're missing the receipt. So make sure you've got all your receipts and then plug it in. And as long as your combined expenses are above 3% of your net income, you'll see a difference.
Also, another trick is if you have a statement from your insurance company, it tells you the amount you paid in the year and the amount they paid during the year and the amount that you paid. I think when you have your statement, there's what you claimed, what they
Yeah,
reimbursed, and what was your portion.
yeah,
So you could have the
exactly.
whole amount there.
Exactly. You
So
get your
let's go.
summary. That's absolutely
Yeah.
right. Yeah, that's absolutely right.
So
Okay, next
let's go to the
question.
next questions. Laura, I have a distribution of an inherited U.S. IRA. Do I put that the full amount in?
Income
Income
exempt
exempt
under a
under
tax
tax
treaty.
treaty.
Okay, so Laura, I'm honestly not sure. I know that I'm not sure whether it's exempt or not because I don't have the tax treaty in front of me. If it is exempt, then what you do is you still include the full amount of income on the tax return, and then you exempt it in taxable income under a specific line, which I believe is 25,600. I think, don't quote me on it, but it's somewhere around that area. Now in UFile, when you enter the foreign income under the foreign income section, we have a foreign income section for pensions. So you click on it, you enter the foreign income pension, your US IRA in this case, and then you enter the portion that is exempt under tax treaty. So I have a line there to indicate what portion of the amount is exempt under the tax treaty. Just make sure you read the treaty and that it is tax exempt. Don't just assume it. Okay, because a lot of times it's either a portion of it or none of it that is exempt. So just make sure that it is by going to review the tax treaty with the USA.
Okay, our
Yeah,
next question is from Chris. My adult daughter
yeah.
lives with me. She qualifies for
Oh,
DTC. Where
I think we
where
skipped
do I
one.
need
We
to
skipped
claim
one.
this
Ida,
on your
Ida. I
file?
think we skipped one.
No, I have
We got
Chris next.
Costa just before.
No, I have the
No, I
opposite.
got Costa just before.
Okay, I
Okay.
have the opposite.
Okay. Okay. Let's go to Chris.
Okay,
We'll
it's
come
okay.
back to
We'll
you,
do
Costa. Just one second.
Chris.
Yeah. Yeah.
My adult daughter lives with me. She qualifies for DTC. Where do I need to claim this on UFile? I think I missed it last year, and I am now debating with the CRA for money they claim I now owe them.
Them. Thank you. Okay, so your adult daughter lives with you can claim the dividend. Sorry, the disability tax credit in this case. So what that means is you have to create your daughter as a dependent in your file under UFile, and then once you have her as dependent, in the left-hand navigator, there's a section called medical and disability. Click on the medical and disability, and then there's an option that says disability amount for the dependent. Okay, so you click on or infirmity for the dependent. You click on that. I'm actually going. You know what? Let me just go ahead and share the screen and show that. Just give me a second, Ida. I'm just gonna go ahead
Sure.
and share my screen. I'll hide you for 2 seconds. All right, and share, hide. Sorry, Ida. And there we go. Okay, so in the dependents file right here, when I add a dependent, right there in the dependents file, you're going to see a section called medical and disability where I've got my mouse on right now. So click on that. Okay. And then you see infirmity and disability amount for the dependent. So you click on that plus sign and then you make the claim for disability tax credit. There's a drop down menu right there. You say claim disability amount. And then it's going to claim disability amount. And if it's your daughter, right? And if your daughter is below the taxable, is not being taxed because her income is too low, then the excess amount transfer over to the original amount. Okay, that's essentially how that works. All right. Now, as far as past years, you are allowed to go back. Okay, that's the nice part about the dividend. I keep saying dividend tax credit, but it's actually disability tax credit. Sorry about that. But for the disability tax credit, you can't go 10 years back. So if the certificate, the disability certificate by the medical practitioner indicates that in one of those prior years that you're entitled to it, then you are entitled to it. You can make a retroactive claim. You just have to amend the previous year's tax return with the claim. Okay, and at that point, the government should give it to you as long as you've got that disability certificate that confirms that your daughter was eligible in that past year. All right, so I'm bringing back Ida. Whoa,
Oh, come on. No,
Ida's
no, no,
dumped.
no.
There you
Okay.
go, and now she's back to normal. Okay,
Okay. So now we're going to go
so
to
let's go to
Costa's
Costa.
question.
Yeah,
Yes.
let's go to
Where in
Costa. Yeah.
UFile can I declare foreign Europe rental income? It is not very obvious.
Okay, so Costa, what you do is first of all, you're going to produce a rental statement in the program. Okay, just like you would with a property in Canada. So you would enter, you would tick the box for a rental statement. You would plug in all the rental income and expenses in that statement. Then, as a second step, you need to add the foreign income section. So let me go ahead and show you here. So I'm going to show it right here. Sorry, Ida. And okay, so then once so like I said, first step, interview setup. Okay, you're going to add a rental statement. You're going to enter the income and expenses like you ordinarily would. So right here, you see under the interview setup, you've got the rental income and property. So you tick that box, you click next, and you produce the rental statement. Okay, just like any other rental property in Canada. Now, the second step you have to do is you have to also add foreign income, the foreign income section, because it's very likely that you pay taxes in that foreign country for that foreign income, and you want to get the foreign tax credit for that income. Okay, so what you would do here is under investment income and expenses, you see right there, you would choose foreign income and foreign property. You would tick that box. Okay. Now, before taking a box, you have to make sure to know what your net rental income is. So make sure to go to the review, go to the tax results, and go to the T776 form. Go see what your net income is determined as per the program, and then you add the foreign income section here under the interview setup. And then once you're in the foreign income section, you're going to see an option for foreign rental right here. So you see right there is my foreign rental income section. You click on the plus sign and then you enter the country, etc. And then what you're going to do is you're going to enter the net income determined on the T776 under foreign rental income entered as rental income already. So you plug in that amount, whatever UFile determines as a net rental income, and then you enter the foreign tax paid. And now you're going to have your net rental income declared, and you're going to be able to claim the foreign tax credit afterwards. Okay, that's how you would do it. All right, let's bring back Ida, and there she is. All right, let's keep going.
Okay. So now we'll go to Ashvani. After school
Okay.
care. I owe an amount to the region of Peel and have been paying it back minimally over a few years. Since my kids are out of after school care, where on UFL do I put that in now? I can't add under dependents as they are older now. Not sure if it's worth adding.
I don't think you can, quite frankly, because I mean, if the children are no longer dependents, I'm assuming they're adults. So after school care, I mean, ordinarily would be childcare expenses. That's where you would enter them in the dependents file. But I mean, if your children are already old enough to be independent, um, I don't believe you can claim it. In either case, I think you can claim
Oh,
them.
I think Jerry may have some technical difficulties.
Okay,
Oh,
there
you're
she is
back.
again. All
Okay.
right. So let's go to the
Oh,
next one. I think it's Robert.
okay. Yes, Robert. Are veteran benefits taxable?
Ordinarily, yes. I believe they're exempt from my memory. I don't believe they would be exempt in this case. There should be some slip to indicate it, and I don't believe they're exempt from my memory. I don't believe they're exempt in this case.
Okay, Sandy. All right. I had a large investment loss when my friend had to shut down a real estate development project that I had loaned him some money for. The agreement we had said I would get repaid plus interest when the project was completed, but it never completed. So, where do I report the loss, and do I report the original loan amount or the loan amount plus interest I was supposed to get?
So in that case, it would probably be an allowable business investment loss. I would assume enable, but you have to make sure the business would meet the criteria. So in that case, what it means is that you have to prove that it's a corporation. Number one, number two, you would have to prove that it's that it would be like a small business corporation essentially. And once you've done that, under the capital gains section in UFile, you're going to see an option called allowable business investment loss, and there's going to be a line for the loan. Okay, for a business loan that you could deduct directly off of your income. You would not be able to get the loan plus interest. It would be the original loan amount. That's essentially what you'd be able to claim in this case. Okay, but you have to make sure that the business is an eligible business for enable, which means that you have to prove to the government that that loan is a bad debt, that you will not be able to recover it. Essentially, that's number one, and number two, that the business type is like a small business corporation in this case.
Next one. I hope I say your name properly. Byung. My mom filed her income tax as a widowed for the first time last year. Would she
Yeah.
be filing her tax this year as single, or she's not remarried?
Okay, so hi, Byung. So in this case, she cannot go back to single. She will stay widowed until she finds another spouse. Okay, so you can't change the status back to single. Okay, the marital status on the tax return. The government will consider that as another status change, and it will cause a lot of problems. So no, she stays widowed unless she gets another spouse, and then she'll be married or common law as of that point. But until that time, she stays widowed.
All right. Next question is from Ravi.
Hmm.
I have to report credit put spread trades in 2025. Most of these were closed before the expiration date. Example, July 14, 2025, sold PUT-ABC expiring in July 25th, 2025. So July 18, 2025, bought it back on that date. I need your help to complete the
Zero
5008
zero
slip.
eight. Yep.
Information on the UFile 2025 software. On the T5008 issued by the bank, the date of settlement is shown as July 14th, with the
Mm.
amount received in box 21, but no information in box 20. I will show July 18th as the date of acquisition on the amount paid in box 20. Do I have to fill in the question, did you dispose the security before its maturity date, if applicable? Is there anything else to be taken care of? Thanks.
Okay. So, so Ravi, in this case, yeah, it's a capital gains transaction because in this case you redeemed the put option before its expiry, so that becomes automatically a capital gains transaction. Okay, so at that point, yeah, there's no cost because chances are the cost might have been before, or quite frankly, the bank has doesn't with put options, it doesn't understand what to put in there as a cost. You have to determine it though. Okay, so it's not zero. You have to put in whatever that cost was. Okay, for the put option. All right, now the dates don't matter to the government because when you transmit the return, they don't see the dates anyways. So it won't matter in this case, or whether you dispose of it before maturity date won't matter. Okay, the key is to determine what the cost was of that put option. You have the disposition amount, but you don't have the cost on the slip. You got to determine that. That's really what's the most important. You don't need the rest. The rest you don't have to worry about because again, the government does not see that information when you transmit the return. So you don't have to worry about that.
Okay. Um, moving along. The next question
Mhm,
is Robert. Where do
mhm.
you insert the premiums for health insurance paid by the employer?
By the employer. You don't unless you can or if it's taxable, the employer would have added them back to your employment income. Now, in the rest of Canada, usually they're not, but in Quebec they are. Okay, so in Quebec on the provincial return, you add those amounts back to the employment income, which the employer does automatically, and then you claim that amount that has been added back to your employment income as a medical expense. Because it's a taxable benefit in this case, you're allowed to claim it under the medical expense tax credit. But in the rest of Canada, usually you don't have this issue. Whatever it is paid, there's nothing to declare. Now, if the employer, for whatever reason, did add it back to your employment income, okay, the portion that they paid for medical insurance, then you take that portion, you claim it under the medical expense tax credit, because now it's a taxable benefit that you're being taxed on. So therefore, you're allowed to claim it as an eligible medical expense.
Our next question is from Christine. My
Mhm.
husband and I file with UFile for many years. Does UFile automatically split our pension income, or have I been missing out on this? My husband also works 6 months of the year.
It's automatic, Christine, as long as you meet the criteria, as long as the income is eligible pension income. Okay, the definition of from income tax will do it, and it won't necessarily do 50%. It will choose a percentage that is the most beneficial. Okay, so yeah, you're not missing out on it. UFile is doing it by default. Okay, so there's no worries there. Okay,
Okay.
next.
Next one is Amanda.
Okay.
Left Canada on January 1st, 2025. Will file 2025 using UFile as an immigrant. How do I do these two forms outside of UFile, but at the same time as NetFile? The T1161 list of
Mm-hmm.
properties by an immigrant of Canada, and the
Yep.
T1243 deemed disposition of property by an immigrant of Canada.
Okay, so Amanda, so you left January 1st. Okay, first of all, an immigrant return cannot be net filed. Okay, you fall under an exclusion, and at that point, you have to paper file that return, including those forms. Okay, so you cannot net file those forms the moment you declare that you're an immigrant. Okay, or the return itself. All right, so at that point, there is no there is no net file. So even if you decide not to produce the T1161, the 1243 in the software, even if you decide to do that, it doesn't matter, okay? Because in the end, the moment you claim you're an immigrant, the program will automatically make you ineligible for NetFile, which is the criteria of the CRA, okay, at that point. Now, for those of you who don't know what we mean by T1161 and T1243, every immigrant that leaves the country is subject to, first of all, declaring the properties they still keep in Canada when they leave. So, for example, if you still have a real estate property or you still have shares in a taxable account, you have to declare those things before you leave the country. That's the T1161, and the 1243 is the form that triggers what's called the deemed disposition rules, which is that if you have certain properties, like for example shares in taxable accounts, or for example you have a small private corporation in Canada, you must trigger a deemed disposition of those shares when you leave. A lot of times we commonly refer to this as a departure tax, even though it's not called that. It essentially is that. Okay, and then you have to trigger capital gains for shares a lot of times that you haven't actually sold. The one exception to that rule for the 1243 is real estate. Okay, real estate is not subject to deemed disposition rules. Okay, but they are subject to the declaration rules on the T1161. All right, so that's what we mean here by 1243. Remember though, you can defer the taxation of the deemed disposition by filing a T1244 form. Okay, and you could do that. You could do that in UFile as well. Okay, but you're better off just doing all of them in UFile, because in either case, you cannot transmit that return anyways. So do everything one shot. That way you make sure that you got all the right forms that you're submitting to the CRA, and make sure you defer the taxation. If you're subject to deemed disposition rules, make sure you file a T1244 as well, which you can do in the immigrant section. So when you declare the immigration and the date of immigration, there's going to be a section in there where the program's going to ask you whether you want to defer the taxation. Go ahead and complete that section. That way you can defer and not pay the taxation. You only pay it later on when you actually sell the shares or those properties, or if you decide to come back to Canada. That's when you'll have to what's called declare those dispositions and pay the tax.
Okay, next question is from Lan Jones.
Mm-hmm.
We bought and moved into a new home in December 2025. One, we got an LOC to buy the new home on on the old home. The old home is now a rental rented out in February 2026. Two, we did some repairs on the old home through December to February, and and I have all the receipts. How do we go about
Yeah.
declaring everything in UFile? I've read about the fair market value, the capital gains, etc., etc.
Yeah. Okay. So the line of credit that becomes a little bit touchy because you're taking it on the old home to. Oh no, the old home is a rental. Okay. So then, yeah, that's an interest expense that you're allowed to claim. Then. Okay. Sorry. Yeah. Since you took a line of credit to buy on. Okay. No, you took it to buy the new home though. No, it would not be eligible then. Sorry. So the line of credit, the interest would not be eligible because essentially you use the line of credit to buy the new home and not to borrow to buy for the old home. Okay, so you can't claim it. Now, as far as the repairs, since we did some repairs on the old home through December to February, and we have receipts. Okay, the question now is for those expenses for those repairs, did you do them for the expectation of renting the home? And if that's the case, then it's a capital expenditure and not a current expenditure, which means you add to the value of the property and you don't claim, and then you depreciate those expenses as you go along over the years. You can't claim them fully in the current year. Okay, so that's the question now. That's the question you have to find out here is okay, when you incur those expenses, were the renters already there? If the renters were there, then you could usually claim them as current expenditures. You deduct them right away. But if you made those renovations in order to rent the home, those are considered capital expenditures to the CRA. And because of that, you can only add to the value of the property, and then you can deduct them as expenses under the depreciation rules, which means 4% of the value of those expenses every single year.
Okay, our next question is for
Next.
William.
Uh-huh.
Auto
Which one?
file,
Because it's
a
got
good
two.
idea, William.
Yeah, no, there's two of them there. Hold on. I'll bring the other one. Charitable donation carry forward. Where do I enter
Oh,
it? I don't know if you can see that. I see it on mine.
oh yeah, that was before
Um,
Ian. I thought I did that one. Sorry.
okay, yeah, no problem. So let me go ahead and share the screen, and let's go ahead and show you I think donations, right? So donations carry forward. We simply go to the donations section. Let me just add that to my file. Okay, so right here we've got there we go. Next, once you are donations section, okay, as of that point, you've got here. There's going to be a section called federal donations or gifts carried forward, right there. Okay, so you click on the plus sign right there, and then you enter the donations by year. Because remember, it's you're allowed to carry forward for up to 5 years. Okay, so there you go. Okay, well now you're really cornering me there, William. So, because now I got to give maybe an unpopular opinion here. So let me go to your question here. Autofile, good idea. Problems? Listen, it depends. Okay, like anything else, there's good and bad. Okay, what I would tell people is, yes, the CRA can do the autofile, but there's a lot of process to do in order for them to do the autofile. First of all, it's not just anybody who could autofile. It's very strict criteria as to who can actually autofile the return using the CRA. Okay, you have to be basically your income has to be below $16,000. All your income has to come from T slips. You must not have produced a tax return in one of the last 3 years, and you didn't produce on time in the current year. Okay, those are usually the requirements for autofile, and it's a very select few people. So for those people who are not regularly filing returns, it's okay, you can literally go to our website, usefile.ca. You go to file for free. And then if you meet all that criteria for autofile for the CRA, you meet the criteria to file for free with us. Okay, and you're going to have a robust system, a robust software that's been around since 1999 to produce the tax return for you and make sure you're claiming all the claims that you can claim. Because remember, the CRA doesn't have certain information that you might have, like your medical expenses, like your donations. They don't have those receipts, and you'd have to go back and forth between the CRA yourselves to be able to properly complete the return. Meanwhile, we're offering you a robust program for free for the same conditions. Okay, and you could claim everything right away, and within a week you have your return that is already assessed, and you get your refund. So why wait? With for the same conditions, you could use our service, which is our online version of the product, ufile.ca, and you could do it for free. Just go to ufile.ca and you'll see an option called File for Free.
Okay, now we have Ricky.
Hmm.
Okay, I am retired. Every year I receive a T4A and a Releve 1 for taxable benefits. When I enter the information into UFile, I always get an error message. I cannot figure out what I'm doing wrong.
Okay, so Ricky, what you're going to do is let me show this on the screen. Okay, so let's go back. I don't know why now it's glitching up. There we go. Okay, so let me myself back resident. All right, here we are. And when you go to the T4A entries, you're going to enter it under the T4A. And under the T4A, let me just go ahead and add it here. So it's under pension income here. Under the T4A, you've got a specific section for what you have. Okay, which is going to be, you see, you got T4A, pension income with taxable benefits, Relevant 1. So it's this one here that you're going to choose. You click on the plus sign for this one. And then towards the bottom completely, you've got the Relevant 1 with taxable benefits. Because these amounts are only taxable in Quebec. They're not taxable on the federal. Okay, so you're going to go to that section called Relevant 1 taxable benefits, and you enter exactly what you see on the Relevant 1. Okay, exactly what you see. And at that point, the program will properly complete that section. Remember that when you have a box A, the combination of J and L must be the same amount as box A. If there's even a penny difference, you're going to have problems with the return. So they have to, so J plus L has to equal box A. Okay, that's the key there. All right, and at that point, you're good to go. Okay, let me hide here. Let's bring back Ida. And there she is. All right.
Okay,
Good
our
stuff.
next question is from Christine.
Hmm.
I also received the DTC. So will UFile decide if Dave get it or I do? He has to pay lots of tax these last few years on his
Yeah.
personal income tax.
Yeah, Christine, whatever you don't need for the disability tax credit, the excess amount will transfer over to your spouse automatically. Okay, so UFile simply does that. Okay, so as long as you don't need it, but the moment you need the disability tax credit to reduce your federal tax, then at that point it stays in your file. Okay, and then the moment there's an excess amount that is not needed by you, it'll transfer over to your spouse. Okay, that's how it works.
Okay, I think Robert, he had asked
Ah,
questions before
okay, okay.
regarding the veteran
I stand
disability.
corrected then,
So,
Robert. Yeah, okay, stand corrected then, Robert. Yeah, I'll admit that. What's called again? My understanding
okay,
was that they were taxable. Okay.
okay. Next question, Young. I started working from home 40% of the time in 2025. My husband already works from home 100% of the time. Not sure if it's worth it for me to ask for T2200 from form from my employer and claim work from home
Yeah.
expenses since my husband is automatically claiming portions of the electricity, internet, etc.
Okay, Byung, in this case, you're not eligible. That's the other thing. You normally, to meet the criteria for work of home expenses, it has to be 50 plus one. So that means it has to be more than half the time you're working from your home, or you're working exclusively from your home, which is what your husband does. Okay, so at that point, it's a moot point. You're not eligible. You would have to work more. So, in other words, out of the 5 days of the week, you'd have to work 3 out of the 5 days from home to be eligible for work from home expenses.
Okay, next one is Yi Sing.
Hmm.
T1135 reporting. What do we enter the maximum cost amount during the year versus the cost amount at year end? What is the difference between the maximum fair market value during the year versus the fair market value at the end of the year? Lastly,
Hmm.
whoops, if you did capital
Did capital
improvements,
improvements,
fixing
fixing
roof,
the
where do
roof.
you
Where do you
record it?
record it? Okay, so T1135. Okay, the difference is that the requirement to file the T1135 is that at some point in the year, your cost base goes above $100,000. Okay, that's the requirement for the T1135. All right. Now that could be different from what the value is at the end of the year because maybe you sold one of these properties, or maybe you closed one of these bank accounts, okay, during the year. So at some point in the year, you might have been at 100,000, but by the end of the year, you might have been lower or you might have been higher. Okay, and that's the difference between the two. So, for example, let's say, I had a bank account, and then I ducked up to 100,000, but then all of a sudden I closed the bank account, I brought the money home, and now I'm below 100,000. It doesn't matter. That means that I'm still subject to the C1135, but that my maximum cost during the year was above 100,000, but by the end of the year, I was below 100,000. That's the same concept for the fair market value. Now remember, the T1135 is not based on fair market value though. The government asks you the question, but it's not based on the fair market value. It's actually based on cost. The cost has to be above 100,000 and not the fair market value. Okay, if we did capital improvements, where do you record it? That's a capital expenditure. Okay, which means you add it to the value of the property. That means you add it to the cost. Okay, so that's going to be part of the cost of that property. So if those capital improvements, make it that you get above 100,000, now you're subject to the T1135 because those capital improvements add to the cost of the property.
Okay, next question is
Okay.
from Constantino.
Hmm.
I have lived most of 2025 in Canada and worked full time, then decided to head back home abroad and cut all ties with Canada. Is there is there any expectations to get a refund if I file my taxes? I am entitled to regular tax credits for the duration of my fiscal residency in Canada.
Yeah, so Constantino, depends. Again, it's a case by case basis, right? I don't know if you're going to get a refund or not. What I do know is that your credits might get prorated. More specifically, your basic personal amount might get prorated based on the number of days that you lived in Canada. So let's take a very simplistic example. Let's say that you left July 1st, which would be right smack in the middle of the year. Okay, that means that for your basic personal amount, you're entitled to at least half of it, which is from 16,000 and change. You're going to claim about 8,000 and change. Okay, and then for the other half, which would be the portion of the year you were no longer in Canada, you have to show to the CRA that for that portion of the year, over 90% of the income that you gained was Canadian sourced. Okay, so if you could prove that to the CRA, then you're claiming the full basic personal amount, and you're claiming the full credits like any other full year resident of Canada. But you still have to you have to show that claim under worldwide income. So when you're entering the immigrant section in UFile, it's going to ask you for your foreign income and your Canadian sourced income for the portion of the year you were no longer in Canada. And that's going to determine what we commonly call the 90% rule, which means that as long as for that portion of the year, over 90% of your income was Canadian sourced, you're getting your full credits. If you don't meet that rule, you're getting a prorated amount of your basic personal amount, which means it'll be prorated based on the number of days that you were in Canada. That's how it works.
Okay, next question from Chris.
Hmm.
I tried to enter a T5 and a payer named DT Asset Management Inc. And I noticed all kind of amounts of money in different like number 13, and different amounts are all the way down. I did not enter any amount myself. Why is that?
I'm not sure. I'll be honest with you, Chris. I
Did you
tried.
use
Okay.
autofill my return first?
Yeah. Yeah. That's the question. Did you download it from the CRL? Although you probably wouldn't have by now. Because I don't think, is it even? I tried to enter the T5 boxes, I'm assuming, like 13 in different amounts all the way down. Do not enter any amount myself. Why is that? Yeah, it must be autofill. You must have downloaded them directly from the CRA. I'm not sure. I'll be honest with you, Chris. I'm not sure how you saw those amounts, unless you did the autofill, which is to download the slips directly from the CRA website.
Okay, next question is from Ravi.
Hmm.
Yes. Can I pick and choose the exchange rate to be used on different trades, average annual exchange rate or the rate of the actual dates of trade, whichever is better for me, or do I have to be consistent?
You have to choose either between the monthly rate or the average yearly rate. That's the rule. Okay. So, and you have to, and once you make that choice, you choose it for all of your transactions, not just for one. Okay. So you either choose the average yearly rate for all of them, or you choose the monthly rate for each month that you sold. Okay, so that you can easily get the information from the CRA website, not CRA, sorry, from the Bank of Canada website. You can get the information there, but you have to choose between the two. You can't just play around with each one and say, okay, well, I'm gonna take the yearly rate for that transaction, and then I'm taking the monthly rate for this one. It's either you take the monthly rate for each individual month that you do the transaction, or you take the yearly rate for everything. That's how it works.
Okay. Biyang, my child
Hmm.
started university and I do not see anything other than tuition fees that I can claim. I guess they got rid of textbook expenses too, or
Yes.
box.
So that's no longer there. So the government will still indicate to you the number of months full time or part time that your child was in university, and that's important for certain other amounts, like for example the Canada Workers Benefit. Because for example, for the Canada Workers Benefit, if you've been a full time student for more than 13 weeks, you're not entitled to it. Okay, to the Canada Workers Benefit, which is a refundable credit based for lower income workers. Okay, so make sure to enter the months full time, part time, so that way the program can properly compute whether your child can claim the Canada Workers Benefit or not, or for example, if they're exempt from the scholarship income that they collected if they did. Okay, that's the only way. But otherwise, you're absolutely right. Directly linked to the tuition fees, there's no longer the textbook amount or the amount for full time and part time studies. That's been gone now for several years. I think since the Trudeau government first came into power. Actually, I think since 2015, the government has scrapped that. But there's also although no, your child is probably not 25, because I was going to about to say the Canada training credit, but your child's likely not 25 years old, so she what's called he or she would not be able to get it.
Okay, next one is from Rock. I need Philippine pesos exchange rate, but it's not available in Bank of Canada. Where do I get the exchange rate for Filipino pesos as a reference?
I'm surprised that would not be in the Bank of Canada. Hold on. Let me. I'm sorry. It's not that I don't want to believe you, but I want to check it for myself because that doesn't make sense to me. Let me try
I
the
think that's
yearly
everybody's
rates.
reference, the Bank of Canada.
I'm shocked that they don't have it. Usually they're pretty complete. But yeah, no, you know what? He's absolutely right. I'm not seeing it. Then you know what? Just use the spot rates. I mean, that's the only thing I could tell you is use the spot rates by just googling it. I mean, that's the best way to do it at that point. Yeah, I'm not seeing it. You're absolutely right. Yeah, no, just use the spot rates that you get from Google. You know, that's the best way to do it.
Okay, Constantino. Not
Yeah.
related with my previous question. Can I use the R31 that is not under my name if I am subletting?
That's a very good question. My instinct would tell me no, because you're not
But it's
living
not
in
a
it
it's not
anymore.
a it's not under his name.
It wouldn't be under his name if he's subletting. Yeah. Yeah. Oh no, if it's not under his name, then forget it. Yeah. Sorry, I misread that. Okay. Yeah. I read that it was under his name. Sorry. If it's not under your name, no, forget it. You can't claim it. No, it's whoever you're subletting that's getting the Relevant 31.
Okay.
Hmm.
Ravi, the T1131, I missed your explanation. Is it to be filed based on the value of as of December 31st, 2025, or should it also be filed
Yeah.
if at some point during the year the outstanding value of your trade is over 100,000?
The way it works is that it's the cost, right? It's not the trades; it's the cost of the assets. Okay, so you would take, for example, all the shares, all the foreign shares that you have in taxable accounts, and say, okay, what's my cost in the year? And did at some point in the year did it cross over $100,000? Okay, if the answer is yes, that's when you have to produce the T1135. It's not number of trades; it's the value of the shares at some point in the year. And not the value, sorry, the cost of the shares at some point in the year go above $100,000. Okay, and then once that, and then you don't have to do this the moment it goes above 100,000. You only file it for the filing deadline April 30th, 2026. So for 2025 tax year, you file it by April 30th, 2026, and you're on time. And there's no penalties at that point. Okay, you only do it once. You don't do it the moment it crosses over. You only file it by April 30th.
Okay, next question is from Kevin.
Mm-hmm.
For selling items on eBay, I have approximately 11,000 gross in sales. I
Mm-hmm.
have a mix of items I sold that were purchased for the express purpose of reselling. But I
Okay.
also have a lot of personal items sold, collectibles, mostly
Yeah.
trading cards, etc. I don't
Yeah.
have any individual sales over $1,000 per transaction.
Yeah.
When filing my taxes, do I just remove the personal items from my gross sales declared? A bit unclear on how to handle this.
Well, Kevin, to me, you have a business. That's how I see it. To me, these are business. This is a business. It's not capital gains transactions. Because to me, again, because you mentioned it for the express purpose of reselling. Okay, so if that's your purpose, that's a business. Okay, you have a bona fide business in your hand. So the sales are actually business income, they're not capital gains. Okay, now for the personal items, there is a section in the capital gains area that's called personal use property. Okay, and that's the one you would use if you have gains. If you sold them at a loss, then you don't declare them. Okay, because you can't claim the loss anyways under the personal use property. Let me just make sure I'm giving the right term. Let me just give me 1 second. I'll tell you exactly the term for your personal items. Capital gains, and then we go here, and it would be personal use property. Personal use property, that again, if you sold them at a gain, then you declare it in capital gains personal use property, your personal items, which again, these were not intended to be a business. Okay, you're just selling off, personal items you no longer need. But the items that you said were the express purpose of reselling, that's a business. Flat out, that's a business. Okay, so that means you have to produce a 2125, you have to produce a business statement, and the sales you made you see the sales you made are sales, they're business income. That means it's part of your gross income. Now what you could do is you could produce a cost of goods sold, and then you can deduct the cost of those items within your business statement. Okay, under the COGS, or cost of goods sold. Okay, but again, it is business. Okay, it's a T2125, not a capital gain for those items.
Okay, we have another
Okay.
question from C Saba. The software is not deducting
Yeah.
expenses from the business account. Do you know why this might be happening? For example, when I enter a meal expense and then go to review the return, the total amount remains unchanged. The amount I own.
That I'm not sure. I'll be honest with you. I don't know why you would not be getting your expenses deducted. I don't understand it. Barring seeing the return, it would be hard for me to tell. Why the program is that. I'm just trying to think off the top of my head. What would be a reason why the program would not be deducting expenses for your business? Um, yeah, I can't think of it off the top of
Self-employed.
my head.
Is there a percentage maybe?
Even then, the amount should be changing. He's saying that the amounts don't change at all. So that's kind of bizarre. Um, I honestly, would have to call the support staff. I'm not sure. We'd have to look at your file and see why it's not doing it. I can't think of anything off the top of my head. I don't know, Ida, if you can. I can't think of anything off the top
No,
of my head.
well, it's the form. There's probably something not at the right place on the
Yeah.
form, I'm assuming. The best thing is to contact support. If
Hmm.
you are using the cloud version of the software, UFile Online, you can write to help@ufile.ca.
Hmm.
Be specific with your question. They will probably ask you for a what do you call it, a encrypted version of the file, just for them to see if everything is entered at the right place.
Yeah.
If ever you're using Windows, please write to support ufile.ca. Same procedure.
Yeah, and essentially when we ask for the file, we don't see your name, we don't see your SIN number, nothing personal is sent to us. We just see the data that you've entered. And that's it. We don't know when your name or anything else. That's the key there. All
Yeah, it's
right.
encrypted, so
Yeah.
there's only specific things we are allowed to see.
Yeah. Exactly. All right. Was that the
Okay,
last question so far?
that was the last
Still,
question
well,
so
we still
far.
got 10 minutes, folks. So
Yes,
start typing away
so
at your questions.
yeah, you want to explain on the website? Actually, if you go on our website, there's a lot of information there. We have blogs under. Sorry, I don't have the, the thing in front of me, but we have blogs on there. We have a help section, um, so on and so forth. So there's a lot of information. I'll do under two questions. Okay. Kevin, yeah, okay.
Yeah.
eBay reported my sales to the CRA in bulk, so a mix between personal and business sales. We mostly clarify was mostly clarifying if I can just deduct the personal use property sale from the total sale
Mixed.
of the business.
Okay. Yeah. No, Kevin, you have to do an amendment to your return with a letter explaining what the
Okay.
differences were. Okay, that's what you would need to do. All right, you would have to in this case, basically do an amendment return. You can't deduct it off your business income. It doesn't work. You have to explain to the government that this portion of income was not for my business. It was personal use. That's what you would have to do. Okay. Yeah. Go
Next
ahead.
question.
Yeah.
Volodymyr, could you please show what fields needs to be filled for foreign rental income, and does it need to be filled on the T766?
Okay, so the form is T776. Okay, that's the actual form. Yes, you do need to fill that form. Even for a foreign rental, it has to be produced. Okay, so I showed it a little bit earlier. Let me show it just quickly now. Okay, so again, first things first. Okay, under the interview setup, you're going to add the rental income statement. Okay, that's the first thing you got to do. So you're going to add the section for rental income, rental property income. Okay. 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 Now you've got rental income, rental property income right here. You go to your T776 and you enter your income and expenses like you ordinarily would. Okay, whatever it would be. Now, once you've done that, you compute the return and you determine what your net rental income is. You have to mark that down because you're going to need it to determine the foreign tax credit. It's very likely you paid foreign taxes on that rental income. It's very likely. Okay, so mark down your net rental income and then you go back to your interview setup. Okay, once you've marked it down, you tick the box next to foreign income or foreign property right there. You tick that box. You click next at the bottom of the screen. And then from there, you're going to go to the foreign income section, which I should have right here. Okay, so the foreign income and property section, you're going to see foreign rental income. Okay, right there. Click on the plus sign. And once you've clicked on that, you enter now the information, including the rental income that you determined right here under foreign rental income entered as rental income because you already have the T776. The only reason you have to re-enter it there again is to determine the foreign tax credit. That's the only reason. And then from there below, you enter the foreign taxes you paid on the foreign return. Okay, a foreign rental income. Just plug in the amount, and then the program will compute for you the foreign tax credit. Okay, so there we go. Okay, so next, all right. And that is back. Okay.
Matt, so for Matt, how often do we conduct these sessions? We will try to do them every 2 weeks or so.
Yeah.
We're going to try to do one probably in 2 weeks. We'll post the dates on the Facebook
Yeah.
pages. All right. Kevin, your feed
Uh,
cut off there, but I think okay, that's fine. Michael, I allowed you file to merge. the info from 2024 to 2025. I also autofilled from CRA. I noticed there are many T3s and T5s on the left-hand side of the screen without any numbers in them.
Mhm.
I wonder I wonder they are old T3s and T5 of last year from UFile or they are from the CRA website. Being said, do banks send all the T3s or T5s into the CRA?
Yeah.
Considering the statement on UFile under T5 income under
Yeah.
50 may not be receiving a slip, but I have to report it to the
Report to the
CRA. Am I
CRA.
responsible for reporting this income?
Okay, so the answer, okay, first of all, yes, the slips that are there are from the previous year. So when you carry forward, you file from one year to the next, the old slips should appear there, okay, that you had from the previous year, right? At least that the descriptions of them should be there, not the actual numbers, but just the descriptions. Okay, that's number one. Number two, does the CRA receive the slips? The answer is yes. Every financial institution is required to file a copy of your slips by February 28th. They're required to do this, okay? With the CRA. Now, next, income under $50, you're absolutely right. They don't receive a slip, but you do have to report it. You're absolutely right about that. Yeah.
Okay. Heather, can you please review what's different for tax return this year in general? I have one adult child and one is not living with me, and one is a teenager who is a dependent.
Okay, well, what's different is that actually we're about to have a podcast that's going to mention all the differences this year. Just go to our YouTube page, or if you want to listen to it, go to the podcast, whether it's whether it's YouTube Music or whether it's Apple, what's called it's Apple Podcasts, whatever it is. We're going to have a podcast coming out in YouTube and on YouTube as well to come out in the next few days. Okay, we're going to mention all the changes that are coming to the tax return. Just very generally, there's two really consequential changes. One of them is the middle class tax cut, where the government is reducing the first tax bracket, the rate of the first tax bracket from 50 that the tax rate will be reduced on those, the credits as well, and of course the grocery rebate, which I mentioned earlier at the beginning of the session, which is essentially the replacement of the GST credit, which is the same as the GST credit, except that the government is increasing by 50% the first payment, what's called the June payment in this case, and then for the next 5 years they're increasing the payments by 25%. Those are
And
really the consequential. But again, you want the detailed one, go to our YouTube page, go follow our YouTube page. In the next few days, we're about to release the tax changes. We're going to have a podcast on the actual tax changes that are coming.
as well, you have a blog on our website for on the
Yeah, and we have a
changes.
blog as well, which has the changes as well. You're absolutely right. Yeah, absolutely right.
Okay, Kathy, I use CRA auto download my slips, but UFile then duplicates tax slips. It remembers the slips I had last year and they are blank, and then I have to delete them after I
Yeah.
download from the CRA.
Yeah, listen, it's kind of like the cost of doing business, I guess you could say, because the program wants to make sure that you know the slips that you had from the previous year. So of course it will duplicate those slips. Just remove them. That's all. If you're going to use autofill, remove them. Remove those slips that the program has right there. It's very easily done by clicking on the minus sign and then just download them directly from the CRA at that point.
Thank you, Be Young, for your comment. So we're
Thank
going
you
to
so
go to
much. Yeah.
Anna. When using the autofill my return from CRA in Revenue Quebec, they are duplicates of the T4s, T5s in the interview setup section. I deleted the duplicates. Is that
Yeah.
okay?
Yes, if you're going to use autofill, then you don't need to have those duplicates anymore. Just delete them, and at that point, just download them directly from the CRA Review Quebec. There's no need to have them. Absolutely, yeah,
Okay.
you did the right thing.
Uh, Xiaomin, I'll say Zhao. It's a lot easier for me.
Yeah,
I have box 48 for T4A fees for services, where I fill box 0 from Releve 1,
one.
box
I
0.
think it's probably one. That's Zoo. That would be business income usually. These are fees for services. Means that this is professional income, so you would have to enter into business. So you have to enter in a business income. T2125 is what you would need to produce, and the equivalent in Quebec, which is the TP80. Okay, so you would have so this is business income to the government. Okay, so you would have to fill it in as business income on the return.
Okay, Christine, how to avoid having to pay thousands in personal income tax for my husband Dave each year. He turns 71 next year. He collects CPP and OAS,
Okay.
but he
Hmm.
also has two seasonal jobs for 6 months of the year. Do we have to
Hmm.
ask both employers and the
Yeah.
CPP and OAS to withdraw
Yeah.
more tax from his paychecks and monthly benefits? I trust you file to correct me when I file our taxes, but he has but he has to pay a huge amount of money.
6 months on the and it's two seasonal jobs on top of it, right? So he must be making some pretty good money during that time, and chances are you're probably subject to his clawback. And to be, yeah, yeah, your best bet is to ask for withholdings at source. And say, listen, withhold more. Okay, you could do that with them as well. That way you're sure not to pay a lot of taxes once tax return time comes around.
Thank you, Ravi. Yes, the recordings will be available on Facebook as well as we're going to post them in on our YouTube page. Okay, Catherine, can you also claim the previous 5 years of medical expenses in this year's taxes?
No, Catherine, what you would have to do is amend each year. Okay, so if you had 5 years worth of medical expenses you didn't claim, you have to amend each tax year with the medical expense of that year. Okay, that's what you would have to do. You can't simply, it's like donations where you can not claim it, and then on the fifth year, you could just lump sum claim all of them at that point. You can't carry forward medical expenses. You could carry forward donations. So if you want to claim those 5 years worth of medical expenses, you got to go to each one of those years and claim the expense that was incurred in that year as an amendment for that year. That's how you would have to do it.
Okay, thank you everybody for your comments. So let's go to Vincent. I have a pension.
Yeah.
My wife has zero income. How do we split income to our best outcome on UFile?
Okay. So Vincent, there's nothing to do. Basically, just enter the pension income on your return, and the program will split with your spouse automatically. Okay. There's absolutely nothing to do. UFile will simply do it because it's going to notice that your spouse has no income, and at that point, it will be beneficial to split that income up to 50% as per what is allowable by the government to your spouse. That's all you need to do. Just enter the income. That's it. Okay.
All
All right.
right.
So I think that's it. I think that covers our time. We're
Yes.
going to do an hour.
Hmm.
And I think those were the last questions. So yeah, I go ahead. I don't know if I could. Yeah. So
I
okay. So let
don't
me just
have.
mention here again. Yeah, so again, let's go to our websites. Okay, so whether it's ufile.ca, we have a blog. We have blogs where we post a lot of articles, including, for example, the upcoming tax changes. It should already be on our website right now.
It
Ufile.ca, go to
is.
tips and tricks. Go to tips and tricks and choose Ufile blog. Go to our Facebook page, also has a lot of information as well. And go to our YouTube page. We do a podcast quite regularly on various tax topics, including a tax update that's about to come. We're about to post it right now in a couple of days. And what's called yeah, just follow our YouTube page and then follow our Facebook page because we will be doing more of these Facebook lives. One is coming in the next 2 weeks.
Okay, we'll answer the last question and we'll
Okay.
stop the questions here from Anna. This year I received a T5008 in the mail, never received one in the past. When I was in my CRA account last night, I do my autofill. I noticed that I had received a T5008 in the past, but CRA never said anything. Is there anything I should do?
So this year you received one in the mail, never received one in the past. When I was with the CRA account last night to do an autofill with you file, I noticed that I had received T50 in the past, but CRA never said anything. You know what? It depends on because sometimes you'll get a T5008 with just the cost amount, but no disposition amount when you buy shares of something you never actually sold. Remember that it's realized gains that you're taxed on, not unrealized gains. So that could be the reason why. Otherwise, it could be that simply they didn't check, and maybe you did have a capital gains transaction, you never declared it. I would still declare it if I were you, just to be safe. Go ahead and amend the return and declare the capital gain at that point.
There's Megan that just had a question here. I entered my
Yeah.
daughter's tuition under her file, but she actually does better with her refund without it. What would it be affecting? That doesn't make sense.
It could be the Canada Workers Benefit. because
Ah,
if she doesn't enter the tuition, then she would be eligible because she's not a full-time student as per the program. The program wouldn't know that she's a full-time student. You understand? So because of that, she might have a small worker's income that would trigger the Canada Workers Benefit. But the moment you enter tuition and you enter at least 4 months of full-time studies, it will cancel the Canada Workers Benefit. So that could be the reason, but it's not a valid reason not to declare it. You understand me? So you declare the tuition and allow the program to properly compute those amounts and determine the eligibilities of those amounts. Otherwise, you're getting amounts that you're not supposed to get. So
and
so just
anyways, if
make
she
sure
doesn't
with
use
that.
the tuition now, it's going to be carried forward for a later year when she has a higher
Exactly.
income. So
Yeah, you're not
it
losing
is
it. You're not
beneficial.
losing it. Yeah, you're not losing it. Okay. All
All
right. So I
right,
think that's it.
that's
I think
it.
we're done. Okay.
So
So
thank
thank
you
you,
very
everybody.
everybody. Watch our Facebook page. We will post the next event within the next couple of days, or by next week for sure. All right. So thank you,
Take care,
everybody. Have a
everybody.
good day.
Bye bye.
Are you there? You're blank.